You owe to this Topic Elite EMA Academy, where trading is made easy. I'm your host, Morgan Epikaizo, Doxel Kame Jr. So let's get started. So the first lesson that we'll look at, it's market structure. What is market structure? You need to understand what market structure is. So market structure, or rather market anatomy, is one of the important things that you need to get in the market. So market structure is just perhaps the most important aspect in trading and analyzing the chart. By having a good understanding of market structure, that alone could elevate your trading beyond beliefs. So if in this lesson, I will be going over different types of market trends and structure breaks. So there are actually three basic movements that the market trends in. One, we have uptrend. Two, we have downtrend. And three, we have a ranging market. So now, each one of these three movements, it has what we call it consists of it comprises of 4 swing points. And these swing points include higher high, which is abbreviated as in double H, which is the capital H. Then higher low, which is HL, and lower high, which is LH, and lower low, which is LL. So these are the market trend. So if you check on the first example here, we have an uptrend. So in an uptrend, we see market printing higher highs and higher low, higher highs and higher low. So on the higher low there, that is where you place your order blocks, because that is where you find institutional reference point of interest, which includes the fair value gaps as well as the order block. So that is on the higher highs. So an uptrend, it is just it prints. This is where price prints a series of higher highs and higher lows. Then we also have another one, which is a range market. So in a range market, this is where a market ranges, and the range market is where price moves with no direction or just consolidating levels of support and resistance. And then you find that price will be printing equal highs and equal lows. So we have equal highs and equal lows. Then in a downtrend, this is where now price prints a series of lower highs and lower lows. Okay, so now if you are not familiar with how to identify your swing points, so here is a brief example. So if you check on top there, as you can see, the swing point here, we have a swing point there and another swing point there and another swing point there. So every time when you reach a swing point, you mark, you draw a line, just like that. So you draw a line there and you also draw a line down, just like that. Okay, so now let's look at what we have here. In an uptrend, we have this one here. So these are shaded part. These are what we call order blocks. So you wait for price to come again in the same order block, and then once it taps there, that's your entry point. Then you target the recent high. That would be your take profit zone. So even here, we also had price printed an order block, and then it came back, it tapped into it, and then it went up, just like that. So this is an uptrend. Then downtrend, we see price breaking the lower lows. Can you see that? Yeah. Then as it is breaking the lower lows, it's creating a lower high. On the lower high, this is where price lifts order blocks. And order blocks, that is the point or region where you need to take your entry positions. Okay. So this one, it's a ranging market. It has equal highs and equal lows. So we don't trade in this kind of a market. It has too noisy. It is too noisy. So we don't consider this kind of a market. Okay. Then the other thing that you really need to familiarize yourself is BOSS. which we call break-of structure. So I hope the understanding of the three basic market movement was pretty straightforward. So there isn't much to be honest. So as long as you can identify your swing points, then you're good to go. Now that that was just one of half of the understanding of market structure. So I'm going to teach you guys how to identify a break-of structure. So how to identify break-of structure, it is important, and its importance and how to identify the break-of structure is necessary to be able to find trading opportunities, because by understanding this principle of the market movement, you can accurately determine where the buyers and the sellers are gaining strength or weakness. So there are actually two types of break that you must differentiate between a continuation break as well as a reversal break. So this is what we call our change of character, which is a CHoCH. Okay. So now let's look at them. So the first example we have a box there. So on each we see that a box is created in an uptrend, because here we have higher highs, then higher lows, and in the higher lows, this is where we have order broke. So in this example, we see that a series of higher highs and higher lows are being printed, and this tells us that we are in an uptrend. Now, if you pay attention, every time a high is broken on HH, then it pulls back and prints an HL, which is an higher low. Then it continues and then it breaks the high. So we call such kind of a labeling point as in boss. So that is the boss. Then a CHoCH. Now the difference between, in this example, the second one, as you can see, price was in an uptrend. Then this low failed to hold. The low failed to hold and price printed a lower low down there, and that's our first sign that sellers are coming into power. So when price breaks through the last low, that's an indication that there can be a shift in the trend. So you can identify the break as in a CHoCH, or rather a change of character. So once you have anticipated the CHoCH and the price prints the lower low, you can expect price to pull back. And in this instance, you use the Fibonacci tool. It's there on MT5 as well as MT4. You press it there and then you mark your levels. Okay, so that is the difference between break-of structure and the change of character. Break-of structure occurs in a continuation uptrend or a downtrend. A change of character, it occurs when the market is about to reverse. That's the difference. Okay, so now let me show you guys these two examples on a chart. So if you check this chart here, this is an uptrend. And in an uptrend, we see price printing something which is good. It is breaking structure, breaking the higher high. This higher high has been broken, and it has printed the boss, a break of structure. And then your major interest is the last part, which is the higher low, which was printed like here. So on this higher low here, it left an order broke, and price went up, and guess what? Price remembered. Price, the way price is that price never forgets. It remembers where it's coming from. It left an order broke, so it will go up and come back. So as a trader, you really need to be patient. You really need to practice patience and discipline. Remember, trading is all about 90% it's psychology. It's your mind, what you're thinking. So when you see proper structures, Those are the structures that you can execute. But if a structure is not making sense with what you know, then don't trade that market. Just leave it. So this is an example of a boss on a chart. Now let me show you an example of a change of character on a chart. Okay, so if you check here, this price was moving in an uptrend. Breaking structure, but guess what? This low failed to hold. And the moment when this low failed to hold, what happened is that we see price breaking, taking out the lows and then creating a change of character. So when price creates a change of character, mark your swing high. Mark this high on the top there, mark it up. And when you mark it up, you find that price came back, it tapped into the zone, and it went down. You make money. That's how it goes. So these are the two examples that you can see on the market: the break of structure and the change of character. Thank you for your attention. Subscribe to my YouTube channel. I'm Morgan Epika Izukama Jr. Thank you. Okay, we end the video now.